Hello, trading is closed on July 21st, 2017. As usual, let's go over my calls from last evening. I was looking for a pattern with an early low, which we got. Monday, we should have a pattern with an early high, which tends to have a high in the first hour and a low in the last hour most of the time. I said unless we gapped over this high, lower prices should print. Which they did. During the day, MEJT said this was a false move, that prices would return, surpass this line after this time. Well, it doesn't have to be after this time, but it did. And notice this is a resistance area, so we closed at a MEJT resistance level. Doesn't mean resistance has to hold. Well, what's good about this chart and what's not so good about this chart? What's good about the chart is we started out low, rallied all day long, closed over this high. It's also good that on a Friday we rallied into the close. Almost always that rally continues early Monday, and frankly it wouldn't surprise me, though it doesn't have to, it wouldn't surprise me if we rallied when the futures open on Sunday evening. It's also positive that we have a price in futures which is higher than the price we have in cash. It tends to print at some time, although it's not obliged to print anytime soon. So those are the good things. What's the not so good things? First of all, the close over this high came too late to be significant. Closing in the last 5 minutes over this high doesn't really count. It's not strong money. Buying into the close with abandon, with a wall of buying into the close. We close right at the high of the day, a Hobson close. Very often that gaps down when the market reopens. Very often a wall like this gaps down when the market reopens. We have a rally right into fib resistance. It's also into the MEJT resistance. Thursday's pattern is negative. When you don't close near the high, we had this negativity, but a drop which is reversed essentially completely doesn't do the job for me. Usually you get more than that, and all would be forgiven if when the market reopened we gapped under this low. Here's our DeMark sell signals on the 65-minute chart. They indicate the area of a top. So far that's worked. In alignment we have them on the 78-minute chart right near the top. We topped out exactly at my price in futures. We topped out, here was my date, essentially exactly at my time. If that is the high, there's a pretty clear pattern of three-wave movements. Here's your A down, then there's an A, B, C, with C equal to A in wave B. And if that holds, it implies wave C down could start immediately. So we have a number of things saying we gap down. And all we need to do to show that this rejection of this high is for real is to gap down under this low. Gapping down under this low will just confirm that this high is the real thing. Now, what if it is? Here's the Lindsay stuff. If we're dropping down here, 0.25 is probably in. The real confirmation comes after we close under all these lows and add to it. But if we reverse from this level with everything else we have going for it, I think that would just be a matter of time, since these lows have to be undercut at some time. It's always possible to change your mind before these are undercut. But if we have a gap under this low and keep dropping, I don't see what could let these things hold. Now, I really don't believe Lindsay's call, but if he's right, we should drop to 0.20 pretty fast, and over the course of the decline, drop down to 0.10. Well, that's 1810. That's kind of hard for me to believe, but I didn't think we'd rally this high in the first place. Well, if this is the count, remember, this can only be counted as a three-wave move. There's no way to count this as a 5, for example. No way to count the subwaves here as a 5. If this is a three-wave move, it has to be B, and at some point wave C has to come. Well, I set the height of A equal to 38.2%. We got a few targets. If C equals A, we get 2153. If there's a fib relationship, we get 1952. And this is kind of absurd, I think, but 1627. But what if C equals twice A? What if? Well, twice A would be 76.4%. The low 1800s right here, that's 0.10. That's Lindsay's number. That's his target. I think Monday's open should be critical. If we're going higher, which isn't impossible, ideally we should gap up, promptly take out this high, overtake the high slightly over this in futures. And if that happens, I don't see anything that'll stop us from heading up. But there's intense MEJT and fib resistance here, as long as some other proprietary stuff of other people I haven't shown. This is the best chance we've had, the bears have had, in a long time, not to drop the ball, but to score a touchdown instead. And all they need to do is to gap under this low. And if we gap under this low, I think the odds are overwhelming that the top's in. I think there's a very strong chance that will happen. And if it doesn't, it'll be obvious before the open, and that possibility is killed before we open. But Monday's open should be critical. Strong chance we gap under this low, and down we go.